Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the scenario that is now invalidated, because what we were looking for here was an impulse to the downside in a 1, 2, 3, 4, 5, but wave 4 now hit the 0.618 taken from the high of 2 to the low on the chart here at 62.2k, which invalidates a wave 4. This therefore increases the probabilities for a bit of a bigger bounce towards the upside, and even if we would take the low, then the probabilities are high. We are looking for a three-wave structure to the downside, and we just look for a continuation of corrective structures for a bounce at a later stage. But at the moment, the probabilities with the information that we have right now has switched more towards the bullish side. If we, however, zoom in to the 15-minute time frame, then what you can see is that so far price has not even retraced to the 0.382 Fibonacci taken from the low to this high over here. But even if I move this fib around from the high here, right, with this retracement, didn't hit the 382. If I move it up here, then again, we didn't hit the 382 here. And then even with the current high that we have, of course, we still don't have a retracement to the 382. And it is incredibly uncommon for price to not at least retrace to the 382 to the 886 area. When you look for a wave ABC, a WXY, a 1, 2, 3, you want to see price retrace to at least that 382, which is a minimum target for all of these scenarios, and any target above the 382, like the 236, is incredibly rare, so that has low probabilities compared to seeing price moving to the downside, hitting the fib box that we have on the chart. Now with this in mind, we can look for a diagonal to the upside in a wave 1 or a wave A. So we then have a 1, 2, 3, 4, looking to end at wave 5. We don't want to hit 62.7k. That would be an invalidation for this diagonal, because a wave 5 is not allowed to be longer in price than a wave 3. After wave 5, and therefore wave 1 or A, we are looking for that retracement to the downside in your wave 2 or B. Now the common target for a wave 2 is between the 05 and the 786, and the common target for your wave B is between the 382 and the 886. If price moves towards the upside, these fibs will move towards the upside as well, because the fibs are taken currently from the low to the current high that we have on the chart. Now, after wave 2 or B, we are then looking for a continuation to the upside in either a wave C or a wave 3. If price would move towards the upside and touch 62.7k, we have to think about other bullish structures, either a bigger diagonal to the upside or multiple 1-2s and then a bigger 3 to the upside, where we expect volume to increase incredibly fast. Now, currently the probabilities, however, would be higher for these structures internally to be more corrective structures, like zigzag structures, which would fit with a diagonal as well. Multiple times here, when price was moving to the upside, we have the volume in the high. So here, the last leg to the upside, highest volume in this move up was in the high. Also over here, the highest amount of volume in the high. Same here once again, highest amount of volume in the high. And this is something that you do see often when you think about a wave C, for example, an ABC, or a wave Y in a WXY. They tend to have the highest volume at the end of a move and then start a bigger range or correction. While if we are looking for impulsive structures, then preferably we see a 1, 2, 3, 4, 5 with the highest amount of volume in a wave 3, which is by far most common. And then we see a range in 4 and then a final leg to the upside in a wave 5. But even though price then makes a higher high, we want to see a lower amount of volume, which is not something we see as price grinded to the upside. So that is why a diagonal at the moment has the highest probability. And even if you would take out this high, then a potential bigger diagonal is definitely on the cards. But at the moment, as long as we do not take 62.7k, we are looking for this on the chart right here. Now the common target for 2, 60.4k, 59.2k, and for wave B, 60.9k to 58.8k. Looking at the divergences, then today we had consistently bullish CVD divergences. It started over here, higher low in price, lower low in the CVD, a bullish CVD divergence, and that was reinforced once more when price was ranging here, more bullish CVDs, and once again more bullish CVD divergences. So now that price over here is starting to create a bit of a range, we can again keep an eye on the CVD divergences. At the moment there is not much going on, right? The range has just started. You really need to give it a little bit more time, but there is of course always the potential to once again create bullish CVD divergences. We do have some news later this week. I think it's important to at least inform you. On Thursday, June 27, 2:30 p.m. Central European Time, some high impact news, as well as on Friday the 28th, also 2:30 p.m. high impact news. So make sure you trade safe around these hours. And if we then finally look at the probabilities of the different scenarios, then on the 4-hour chart, the chart that we see right now, the probabilities are higher to move towards the upside. A wave 4 is now invalidated because of the 618 touch. Even if price would take the low in some bearish scenario, which is quite difficult to count at the moment, so I would need to sit and have a good look. Even if we would take the low, then we are looking for more corrective structures to the downside, and the probabilities will remain higher to sooner or later bounce to the upside. But at the moment, based on a local structure, probabilities are higher to look for more upside. However, on the 15-minute time frame here, you can read that the highest probability is a retracement into that fib box that I explained. As price has been grinding to the upside, at no moment in time did it retrace to the 382, which is very uncommon, right? Retracing to a 236 for a wave 2 X or B is very uncommon. So therefore, the probabilities naturally would be higher to look for price to retrace inside the 382 to the 886 area and then look for some proof of support. On number 2, we of course simply have continuation to the upside. Now if price can move towards the upside and hit 62.7k, of course we can then potentially look for a continuation to the upside, right? If volume comes in as well. But as long as we don't hit 62.7k, I'm keeping an eye on that diagonal as well. But the probabilities nonetheless now on the 4-hour time frame are higher to move to the upside. And if we do, we have some resistance to at least keep in mind. First of all, we have the blue box here between 66.6k and 67.1k, and then the second one 69.1 to 69.7k. Now please be aware of this support resistance area in the range as well on the daily time frame shown in the previous live stream as well as the previous video, 64.5k to 65.2k. This being said, I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.